Welcome to our Personal Finance 101, your roadmap to financial success, where we'll cover everything you need to know to take control of your financial future. Whether you're just starting out or looking to refine your financial strategy, this video will provide you with the essential knowledge to master your money. From budgeting and saving to investing, managing debt, and planning for retirement, we've got it all in less than 15 minutes. So, grab a pen, take some notes, and let's dive right in. Let's kick things off with financial planning and budgeting. Think of financial planning as your roadmap to achieving your life goals. It's all about assessing your current financial situation, setting realistic goals, and creating a plan to reach them. Now, the first step is to track your income and expenses. If you're not sure where your money is going, it's time to get a handle on it. Start by listing all your sources of income and then categorizing your expenses: housing, food, transportation, entertainment, and so on. Once you've got a clear picture of your finances, it's time to set some goals. These can be short-term, like saving for a vacation, or long-term, like buying a house or retiring comfortably. The key is to make sure your goals are SMART: specific, measurable, achievable, relevant, and time-bound. Now, let's talk budgeting. A budget is your plan for how you're going to spend and save your money. The 50-30-20 rule is a popular method. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. Remember, your budget is not set in stone. Adjust it as your circumstances change. But the most important thing is to stick to it as closely as possible. Next up, we have investing basics. Investing is one of the most effective ways to build wealth over time, but it can seem overwhelming if you're new to it. The first thing you need to know is the difference between saving and investing. Saving is setting aside money for short-term needs or emergencies, while investing is putting your money into assets like stocks, bonds, or real estate with the goal of growing your wealth over the long term. So, where do you start? Begin by setting aside an emergency fund, 3 to 6 months worth of living expenses in a savings account. Once that's in place, you can start thinking about investing. One of the most common investment options is the stock market. When you buy stocks, you're purchasing a small piece of a company. If the company does well, the value of your stock may increase. However, the stock market is volatile, so it's important to invest with a long-term perspective. Bonds are another option. They're essentially loans you give to the government or a corporation, and in return, you earn interest over time. Bonds are generally considered safer than stocks, but they also offer lower returns. Real estate is another popular investment, buying property to rent out or sell for a profit. Real estate can be lucrative, but it requires a significant upfront investment and comes with risks, like property value fluctuations and maintenance costs. The key to successful investing is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce risk. Now, let's talk about retirement planning. It's never too early to start planning for retirement, and the earlier you start, the more time your money has to grow. The first step in retirement planning is to estimate how much money you'll need to retire comfortably. Consider factors like your desired lifestyle, expected medical expenses, and how long you expect to be in retirement. Once you have an estimate, the next step is to start saving. Employer-sponsored retirement plans like 401ks are a great option if your employer offers them, especially if they match your contributions. Take full advantage of that match. It's essentially free money. If you don't have access to a 401k, or if you want to save more, consider opening an individual retirement account (IRA). There are two main types: traditional and Roth IRAs. The key difference is when you get the tax break with a traditional IRA, you get a tax deduction when you contribute, but you'll pay taxes when you withdraw in retirement. With a Roth IRA, you contribute with after-tax dollars, but withdrawals in retirement are tax-free. And remember, the power of compounding works in your favor when it comes to retirement savings. The earlier you start, the more time your money has to grow. Next, let's dive into managing credit and debt. Credit can be a powerful tool if used wisely, but it can also lead to financial trouble if not managed properly. Your credit score is one of the most important numbers in your financial life. It affects your ability to get loans, the interest rates you pay, and even your ability to rent an apartment or get a job. So, how is your credit score calculated? It's based on several factors, including your payment history, the amount of debt you have, the length of your credit history, and the types of credit you use. The most important factor is your payment history, so make sure you pay your bills on time, every time. When it comes to managing debt, the key is to prioritize high-interest debt like credit cards. Consider using the snowball method, paying off your smallest debts first to build momentum, or the avalanche method, focusing on the highest interest debt to save money on interest. And be careful with credit cards, they can be a useful tool for building credit and earning rewards, but only if you use them responsibly. Try to pay off your balance in full each month to avoid interest charges. Now, let's discuss understanding insurance. Insurance is all about managing risk, transferring the financial risk of unexpected events to an insurance company in exchange for a premium. There are several types of insurance you should consider: health insurance, auto insurance, home insurance, and life insurance. Health insurance is essential. It helps cover the cost of medical care, which can be extremely expensive. Auto insurance is also important, and in most places, it's required by law. It covers you in case of accidents, theft, or damage to your vehicle. Home insurance protects your home and belongings from damage or loss due to events like fire, theft, or natural disasters. If you own a home, this is a must-have. Life insurance is something you should consider if you have dependents who rely on your income. It provides financial support to your loved ones in the event of your death, helping them cover living expenses, debts, and funeral costs. When choosing insurance, it's important to shop around and compare policies. Look for a balance between coverage and cost. Don't skimp on coverage just to save a few dollars, but also make sure you're not paying for more than you need. Finally, let's talk about tax planning. Taxes are a fact of life, but with careful planning, you can minimize the amount you owe. The first step in tax planning is to understand your tax bracket. This is the rate at which your income is taxed. The higher your income, the higher your tax bracket. One of the most effective ways to reduce your tax bill is to take advantage of tax deductions and credits. Deductions reduce your taxable income, while credits reduce the amount of tax you owe. Common deductions include mortgage interest, charitable donations, and medical expenses. Tax credits are even better because they provide a $4 reduction in your tax bill. Examples include the Earned Income Tax Credit and the Child Tax Credit. Another important aspect of tax planning is retirement accounts. Contributions to traditional IRAs and 401ks are tax deductible, meaning they reduce your taxable income. And don't forget about the tax benefits of homeownership. Mortgage interest and property taxes are deductible. It's also important to plan for capital gains taxes if you're investing. Long-term capital gains on assets held for more than a year are taxed at a lower rate than short-term gains. And there you have it, everything you need to know to master your personal finances in 60 minutes. Remember, financial success doesn't happen overnight. It's all about making informed decisions, sticking to your plan, and staying disciplined. Start implementing these strategies today, and you'll be on your way to a secure financial future. If you found this video helpful, make sure to hit that like button and subscribe to our channel for more valuable content. Leave a comment below with your thoughts, questions, or topics you'd like us to cover in future videos. And don't forget to share this video with your friends and family who might benefit from it. Thanks for watching, and we'll see you in the next video.